Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about ARCUS Biosciences INC quarterly report. ARCUS Biosciences, a clinical-stage biopharmaceutical company, offers a diverse range of cancer therapies through its product portfolio. The company's services include development and commercialization of cancer treatments, research and development of small molecule inhibitors, such as quemliclustat and ABATE-100, and one clinical trials for various types of cancers, including lung, gastrointestinal, pancreatic, and colorectal cancer collaboration with other companies, like AstraZeneca and BVF Partners LP. To support the discovery and development of new compounds, the company's product portfolio includes 1. Castatifin HIF-2A inhibitor for kidney cancer. 2. Domvanalimab anti-TIGIT antibody for lung and gastrointestinal cancers. 3. Quemliclustat small molecule inhibitor targeting CD73 enzyme for lung and pancreatic cancer. 4. Etrumadenant dual A2A/ATWO-billion adenosine receptor antagonist for colorectal cancer. 5. Zimberelimab anti-PD-1 antibody. 6. A B598 CD39 antibody for gastrointestinal cancer. 7. A ABATE-101 AXL inhibitor for lung cancer. The stock price of ARCUS Biosciences, Inc. has increased by over 21% in the past year due to several key factors. Promising clinical trial results from its Phase 2 EDGE-gastric study and investigational drug castatifin have shown significant potential in treating various cancers. The company's strong financial performance, with a 310% revenue increase and beating analyst estimates, has also contributed to growing investor confidence. Additionally, strategic partnerships and designations, such as the exclusive license agreement for castatifin in Japan and Asia, and orphan drug designation for quemliclustat, have further boosted investor optimism. Overall, these developments have fueled a significant rally in the stock price, with shares climbing 37% over 1 month and an 80% jump over 90 days. The primary drivers of revenue growth or decline are largely influenced by external factors and internal performance. On the growth side, collaborations with major pharmaceutical companies such as Gilead Sciences, Inc., regulatory approvals for investigational products, and timely supply agreements contribute significantly to revenue increases. Additionally, commercialization of approved products and ability to differentiate them from competitors also play a crucial role. On the decline side, operating losses, lack of product sales revenue, potential delays in regulatory approval, competition from other treatments, and serious adverse events are major factors contributing to revenue decreases. Furthermore, fluctuations in license and development services revenue, as well as lower development service revenues from collaborations, also impact revenue negatively. Net income and profit margins. A tale of two trends. The company's net income has been on a roller coaster ride. For the 9 months ended September 30, 2025, it decreased by $58 million, marking a 31% increase from the previous year. However, in the 3 months ending September 30, 2025, net income surprisingly increased by 47% to -$135 million. This inconsistency can be attributed to the company's limited operating history and significant R&D expenses. Profit margins have also taken a hit. The operating margin plummeted from -220.8% in Q3 2024 to -54.2% in Q3 2025, while net margin decreased from -39.7% to -51.9%. These declines may be due to increased manufacturing costs, supply disruptions, and reduced protection of intellectual property rights. The company's debt level and interest expenses have undergone significant changes. The debt level has increased substantially from $48 million to $98 million due to the acquisition of a $250 million term loan facility in 2024 and additional borrowing in 2025. This increase in debt has led to a substantial rise in interest expenses, which have more than doubled from -$1 million to -$3 million. Furthermore, interest expenses for the 9 months ended September 30, 2025, were $7 million, up from $1 million in 2024. These changes indicate that the company's debt level and interest expenses have increased significantly over the past year. The company's financial performance was marred by underperformance in several key segments. Specifically, late-stage development programs and early-stage development/preclinical programs struggled, with losses increasing from $69 million to $78 million and $92 million to $113 million, respectively, between 2024 and 2025. Furthermore, the product sales segment failed to generate any revenue during this period. Management is expressing caution about the company's outlook due to several challenges. They expect continued losses, are heavily reliant on Gilead, and face regulatory hurdles that may limit commercialization. Clinical trial delays, competition from other investigational products, and patent expiration also pose significant risks. To achieve growth, effective management of personnel and development of combination therapies is crucial, but this approach comes with its own set of challenges. Additionally, the company must navigate product liability risks and potential changes in healthcare law and policy that could impact revenue. Gilead's acquisitions and divestitures. Overview: Gilead has made several strategic moves through acquisitions and divestitures. On the acquisition side, the company has entered into in-license agreements for investigational products, acquired additional shares of common stock, and secured option agreements for the development and commercialization of new products worldwide. In terms of divestitures, Gilead returned a license to its adenosine receptor antagonist program, etrumadenant, to another entity. These transactions demonstrate the company's efforts to expand its product portfolio while also streamlining its operations by disposing of non-core assets. That concludes the financial summary for ARCUS Biosciences Inc. Feel free to comment below, and I will be happy to answer them when possible.